Welcome back everyone. Today we're going to mix city life with some trading education. We're going to talk about RR, we're going to talk about win rate, and I'm also going to explain my exact take profit strategy to you guys.
So no shots fired on ICT this time?
No Max, we're going to keep it classy today. Let's start with win rate. This is a topic that most people already don't understand. A lot of people assume that the higher the win rate is, the more profitable trading system is. But this statement is absolutely not true. When you have a win rate of 50%, you need to have a lower RR compared to when you have a win rate of 30% in order for your trading system to be profitable. It's all about balance.
Playing on my heart just like a Casio.
In my opinion, you need to run at least 100 to 150 trades to get reliable statistics on your trading system. But let's get a quick example going here, guys. Because at the end of the day, what many people think is that they assume a high win rate with a profitable trader. They assume a low win rate with an unprofitable trader and an unprofitable trading system. But this is actually not the case. Let's say we are taking 10 different trades and we have a win rate of 30%, meaning that we win 3 trades and we lose 7 trades. Now let's assume that we risk $1,000 on each trade, meaning that if we risk $1,000, we lose $7,000, and at the exact same time, every single time we win a trade, we target an RR of only 1, meaning that we have 3 winning trades and we win $3,000. In total, we lose $4,000. Now, in that case, with a 30% win rate, indeed, your system is very, very much unprofitable. But now, instead of targeting 1 R on every single trade, we change our target to 2.5 R, meaning that if we lose a trade, we still lose $1,000, but if we win a trade, we win $2,500. Now, all of a sudden, our win rate is still the exact same, it's still 30, but we are a profitable trader. Because 3 times $2,500 is $7,500 profit. We still have those 7 losing trades, but they remain the exact same, minus $7,000. So in total, we gain $500, and all of a sudden, with a low win rate, we still are a profitable trader.
Casio, playing on my heart just like a Casio. Breaking it apart so you can let it go. Wait another year, that's not original.
Now let's talk about something very controversial, because you know all those people that always talk about the gospel 2-to-1 RR ratio, that fixed RR. I really don't buy that bullshit. Now exactly explain to you guys why that is. First of all, RR, it depends on your win rate, okay? That's what we discussed before. So the lower your win rate, the higher your RR needs to be. There is no such thing as a fixed RR of 2. Because if you have a low as win rate on your system, you need a high as RR in order to be profitable. That's the first thing why I don't believe in a fixed 2-RR ratio. Now, how do we determine what RR we need? Once we have gathered so much data and statistics on our trading system, so we need those 150 to 200 trades in order to know the win rate of our system, and then based on that win rate, we can tweak the RR into a certain direction which we kind of want to target every single trade. But in my opinion, let's say I have a win rate after those 200 trades and I have my data and I have my statistics, and I decide that I need an RR-ish of 2 every single trade in order to really be very profitable. That doesn't mean that every single trade I exactly have to target that RR of 2. That doesn't make any sense. Why? Because I'm not going to base my take profit target and my RR just on my win rate. I'm gonna base the way that I take profit on the chart, because the only way that I'm interested in taking profit on my position is if price reaches an area where it can potentially get a high probability reversal. You have to understand that. If you don't understand that, you're taking profit completely wrong. The only way I can take profit on my position is not if price and my trade reaches a certain RR. No. The only way that I can take profit on my position is if price reaches a massive liquidity pool where smart money can potentially absorb orders and potentially accumulate or distribute their positions before a high probability reversal takes place. Because if price is not reaching a high probability reversal area, why the f Honestly guys, why the f would you take profit on your position? You're just missing out on massive potential gains. Now the problem with most people is that when they need to mark out liquidity, to spot a potential reverse and also to decide where they want to take profit, they always mark out levels like previous day high and previous day low. Or they mark out the previous week low over here and the previous week high right there. And they think above the previous day high, below the previous day low, or above the previous week high and below the previous week low, that's where the liquidity is resting. So this is where I want to take profit. This is where I want to take profit on my longs, and these lows is where I want to take profit on potential shorts. Now guys, let me explain to you why this is way too easy, and this is not the way that it should be. Let's say I mark out indeed a previous day high and a previous day low, and I'm positioned long, and I move towards the 15-minute time frame. What we can see when we play this replay, and let's say I was long, for example, over here with my invalidation below the previous day low, and I'm targeting the previous day high. All right, this is the long position that I was taking on the price of Bitcoin. Or after taking out the previous day high, I'm interested in potential shorts on Bitcoin upon the reversal structure, because I think that that's where the liquidity is resting. Now, if I trust this analysis rather than actually looking where the liquidity is resting, which in my opinion is above this high right over here. Now, why is it resting above that high? Because this is the high that started this very aggressive impulse to the downside that gave us this fake break of structure. Why is this a fake break of structure? Because this low that we break through didn't carry any significance. So in my opinion, this high is where the true liquidity is resting. But most retail traders will identify the previous day high as where the liquidity is really resting. Now, if we play the chart and we indeed see that the previous day high is gonna get taken out right over here, it's not only gonna get taken out, but we can also see that afterwards, the price of Bitcoin forms this reversal structure over here as well. So many people think, okay, this is where I should take profit on my long position for an RR of 2. And also a lot of people, when they see this reversal structure over here after taking out that liquidity, they start looking for shorts over here as well on the price of Bitcoin with their stop loss above that high, targeting, for example, the previous day low. Now the issue is that this is not where the liquidity was truly resting. So this is not where you want to take profit on your long, nor is this an area where you want to look for shorts. What you want to do instead is analyze where the liquidity is truly resting. Now, how do we do that? By analyzing price action from the past and figuring out the human reaction based off that price action from the past. And then we can identify that instead of taking profit at the previous day high, we actually want to take profit at this level over here, which is where the liquidity is truly resting. And this is also the area where we potentially want to look for reversal structures. So if we take out this high, that is where we want to take profit on our longs. But this is also where we potentially want to look for reversal structures, then targeting lower levels again. Now, if we then play the chart on Bitcoin, we can see that eventually Bitcoin indeed goes and pushes towards that liquidity. This is where we wanted to take profit on our long position. But this is also where we can see where Bitcoin formed a very clean reversal structure by sweeping that high over here, and then putting in a break of structure to the downside over here. Now this is an area and this is a trigger where we also can look for shorts once we got that confirmation with our stop loss above that high, and then targeting lower levels instead on the price of Bitcoin. But that is only the case because this is where the true liquidity was resting, and instead of having an RR towards a previous day high of approximately 2, if we are just able to identify where the liquidity is truly resting, instead of having an RR of 2, we increase our RR all the way towards 5.5, and now that is a massive difference that we can only be able to trade if we are able to identify where the liquidity is truly resting, and if we don't work with a fixed RR of 2 instead. For me, there's a massive difference on how I take profit on my long positions compared to my short positions. The market that I'm trading is crypto. And crypto, just like the Nasdaq for example, over time is made to go up. It's an uptrending market, where for example Forex is more of a ranging market, meaning that on my long positions, I almost never close my long positions up in full. What I usually do is that I take partial profits on my long positions because the market is made to go up. There's so much more room for more displacement compared to my shorts, which I always try to close in full whenever it hits my main target. Now there's a massive difference in that, but it allows me to make more profits. Now let me show you guys an example why in my opinion it's so important, especially on assets like crypto and Nasdaq and stocks, which are made to go up, to always take partial profits instead of full profits. Because a few weeks ago, I took this long position on the price of Bitcoin. Now, before you think I'm such a hindsight trader, quickly let me show you guys the exact trading signal that I gave for this long position on Bitcoin as well. Usually I would say this is where the true liquidity is resting on the price of Bitcoin, because we can see we have 1, 2, 3 highs lining up like that, and then the first high out of those 3 is, in my opinion, always where we have a lot of liquidity resting. So usually I would tell myself, okay, if we see a move towards this high, this is where I'm going to take full profit on my position for an RR of 2.66, as you guys can see. But by taking 75% partial instead of 100% profit and zooming out on a higher time frame, I can see that if we indeed get a push towards that high and having this slow grind towards the upside, it makes a lot of sense for Bitcoin to actually go and take out that all-time high level over here. So what did I do instead? Instead of taking full profit at that second to highest high that I just marked out, I extended my take profit target on Bitcoin all the way towards a brand new all-time high around $109,000. So instead of taking full profit for 2.66 RR, I took profit for 75% right here to lock in an approximate 2R on the trading account, and I extended the final quarter of this position towards a brand new all-time high, which would offer me an extra RR of 4.25. So if I play the chart after getting filled, we can see that indeed Bitcoin was seeing a move towards this first take profit target and saw a beautiful rejection afterwards. That is where I closed 75%. Then I moved my stop loss to break even over here. I locked in 75% for an approximate gain of 2R realized on my account, but the rest of the position I held all the way because I was expecting a squeeze towards brand new all-time highs, which eventually is also exactly what we were seeing on the price of Bitcoin. Now, instead of just realizing an RR of 2.66, I realized an RR of 2 on that first take profit target by closing 75%, but by keeping a quarter of my position towards brand new all-time highs for Bitcoin, which was laying at an RR of 13, I locked in an extra 4.25 R gain, and instead of gaining 2.66 R, I gained 2 R plus 4.25 R, and instead of gaining 2.66 R, I gained, indeed, 6.25 R on my trading account by not closing my position in full at the first take profit target, but by zooming out and keeping in the back of my mind that assets like crypto, like stocks, like the Nasdaq, are made to go up, and I extended my take profit target all the way towards a brand new all-time high, and we need some patience here on replay mode, but we can see that eventually Bitcoin was seeing a push towards that new all-time high, and because I kept a quarter of my position towards that new all-time high level, I gained a lot more money on my trading account, and I had one of my biggest trades of the year on the price of Bitcoin just because I was very patient. I kept the bigger and higher time frame context in the back of my mind, and I worked with partial profits instead of taking full profits on the trading account. There's 2 more very important things that I really want to discuss with you guys. The first thing is that my take profit strategy is slightly different compared to a lot of other people. What a lot of people are doing is that they take full profits. Now, I used to do that, but I'm only doing that on short positions. Why? Since I'm trading the crypto market. And the crypto market, just like the Nasdaq, in my opinion, is made to go up. Which means that if I'm positioned in longs, I decide not to take full profit once my target gets hit. I'm always looking for extended targets towards the upside. Meaning that on my first take profit target, I'm not closing 100% of the position, like I'm doing with my short positions. No, I'm closing 75% of my position, or even 50% of my position, leaving a movement back for higher targets. Now, the second thing that I really want to discuss with you guys is not the fact that I'm taking slightly different profit. It's the fact that when price reaches price discovery in markets like crypto or like the Nasdaq, it's often very hard to determine take profit targets. But there are still certain tools that you can use in order to determine those targets. Tools like standard deviations, extension levels, those are the kind of tools that I often tend to use in order to determine those extended profit targets. And that is definitely something that you need to have in your toolkit in order to be able to take the best profits possible. Now, to wrap up everything that we discussed today, let's quickly go inside and summarize things. Win rate only matters in the right context. Fixed RR is a complete and utter myth. And guys, most importantly is that we always take profit at high probability reversal areas, aka at the areas where the most amount of liquidity is at the chart. Now, if you guys want to get more in-depth information on taking profit, trade signals, live streams, educational PDFs, or whatever, we are currently offering a 14-day trial for just $1 single. These days, you can do very little things with $1, but right now you can use that $1 to get 14 days of access to Tribe Capital, which in my opinion is the best and also most authentic trading community in the space right now. All that you guys need to do is follow the first link in the description down below, fill out your credit card information, but you can cancel anytime you guys would like, and I'll catch you guys on the next one. Ciao, ciao!